Hey everyone, Coach Investor back to another video for you today. So let's talk about Alibaba. It's a great company, great business, currently trading at a huge discount. We call this the China discount because, well, there are some risks owning some Chinese stocks, especially in today's market. Some executives might suddenly disappear. You might be getting hit with a huge fine, and then maybe ultimately you might be delisted from the stock exchange. But overall, Alibaba itself, the business, the company, is a great company. And I honestly think if it wasn't a Chinese company, it would probably be trading at much higher valuations. Right now, I think it's just short of $600 billion in market cap. If it was an American or a European company, it would probably be worth close to $1 trillion. Now in this video, we're going to look at the whole Alibaba business because there is a lot under that name. We're going to look a bit at their numbers and then at the end of the video talk about it, whether it's worth it or not, and I'll let you decide. So let me know down in the comments below if you own Alibaba, if you're thinking of owning Alibaba, if you own any other Chinese stocks, let me know down in the comments below. Before I continue with this video, I just want to thank the Motley for sponsoring this video. And again, these are my views and my views only. The Motley is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You guys know I love finding new investing tools and resources to help me find the latest growth stock and innovative company. And right now I have a discount for one of my favorite services, the Full offers. Through the Motley Fool's stock advisor service, you get access to a ton of expert stock picks. Every month you'll get 2 picks that are aimed at growing your wealth and to help you realize your financial goals. Stock Advisor's average stock picks have returned over 500%. If growing your money is something you'd like to do more this year, you can visit www.fool.com/couchinvestor or click on the link below for access to my special offer and decide if Stock Advisor is right for you. Now let's dive into this. Alright, so first, so you understand how big Alibaba actually is, let's just look at a couple of numbers. Alright, so first you have this incredible number right here. They reached 1 billion in annual active customers globally and generated $1.2 trillion in GMV, which is super impressive to say the least. Now let's go and jump into hypercharts and look at those numbers. So last quarter, they generated revenues of $28.6 billion, gross profits of $9.45 billion, and then you can see here operating income for the first time in years, negative $1.17 billion. Now why is that? Well, that's because they got hit by a huge fine, $2.8 billion to be precise. Now, if we jump back to the hypercharts, you can see that in Q4 2020, they had revenues of $16.14 billion. Compare that to last quarter, 28.60. That's a 75% increase year over year. Now, for a company as big as Alibaba, that's pretty impressive. Right, so now that we've got the numbers out of the way, let's talk about the Alibaba group, the Alibaba business, because, well, it's a pretty complicated one with lots of companies under its name. So let's jump right into it. So at the top, you can see you have Alibaba, which then splits into a couple of categories: China commerce, international commerce, cloud, and then the other category. Now, under China commerce, you have retail and wholesale marketplaces. 1688.com is B2B. And then the retail one is Taobao, Tmall, and a word I cannot pronounce. Now for Taobao, which actually means searching for treasures, is B2C. It also has live commerce, which is great. You just watch those people sell you products. It's working like crazy. We've talked a bit about that in the Pinterest video. It has over 2 billion listings in products and services, making it, I think, the biggest one out there. Then Tmall, again, is also B2C, but there it's more branded products such as Piaget, Nike, Ralph Lauren, and it's also live just like Taobao. So you can watch people sell you products. If it's new Nike shoes, new Piaget watch, you can watch them live, the presentation, and then buy it directly. Then you also have Tmall Global, which is a cross-border B2C marketplace, where again, you don't really need to be such a huge brand. You can be a smaller brand and then you can use Tmall Global. And then let's jump into the international side. You have their retail marketplaces and then wholesale. Retail, Aliexpress, B2C. You go there, you can find lots of stuff. Why is it cheaper? Because when it comes directly from the source, there's no middleman, no extra cost, etc. You can buy loads of stuff there for cheap. Then you have wholesale, which is Alibaba.com, which is more B2B. You can buy stuff in bulk. If you're a small business, you want to sell then on Aliexpress, you might just go through Alibaba and then maybe drop ship it and put it on Aliexpress. Then you have the cloud services, which I think is a segment that will still grow immensely in the next couple of years and might have the same effect as Amazon's web services. So their cloud segment actually experienced huge revenue growth of 37% year over year during the March quarter. And as you can see on this picture right here, their market share stands at 6% compared to Amazon Web Services of 32%. Now I know what you're all going to say. Well, Amazon Web Services, Amazon is maybe a more reputable company. People will trust their data and will trust Amazon's cloud capabilities more than a Chinese company, for example. And you might be totally right. But Alibaba might not want to grow their cloud capabilities to the US market, let's say, or maybe the European market. The Asian market, Southeast Asia, is pretty big. And I think that's their go-to market where I think they will grow and grow faster than maybe an Amazon Web Services or a Google or a Microsoft Azure. That's just my opinion. But obviously they will probably attract other players in the West as well. But if your big question, the risk of maybe other companies not wanting to use that, well, there's enough people in Asia and Southeast Asia that might well want to use that cloud capability. And then last thing, moving to the other category, you have something called Freshippo. It's their high-tech grocery chain. If you just look at the video here, you really can see how much further down the line, further down the years, China actually is, whether it's grocery shopping, whether it's e-commerce. They're really just a couple of steps ahead of everyone else in the West. You can grocery shop online, buy through the app, pick up there. Everything is automated. You come, you go to a specific locker and your bag is ready. You can also obviously ship it to your house. But this again shows the digitization of everything that's going on in the world and how China is already a couple of years ahead. And why do I say this? Because, well, let's take the gamification of commerce, let's say in China. They're again also a couple of steps ahead of the competition of everybody else around the world. As you can see here, most of the apps out there, whether it's on Taobao, Aliexpress, or some other apps, they are already gamifying everything, the shopping experience, whether you want to shop in the virtual world or in the real world. The Metaverse already in China is something that is very familiar. Now let's take this case right here. You can see that a store basically took their physical store and made it a virtual one, because maybe some people still want to feel that they are in a real shop. So you go there in one of their real shops, obviously virtually, you browse through their products. If something looks great, you click, you buy, and then it's yours. There's also another aspect, one company that has created basically a virtual world where you set up your avatar. You obviously have some clothes on it. Now those clothes can also be bought in the real world. Again, Metaverse is the next big thing. China is already a couple of years ahead of everybody else. Alright, to conclude, now that you've had the numbers in front of you, now that you know exactly what Alibaba is doing, the group, all the companies beneath it, is it worth the risk? Before I answer that question, let me know down in the comments below if you think it's worth it. So, to me, it is maybe worth it to open a little position. I personally will not, because, well, I don't have any place for them in my portfolio. But if I manage somebody else's portfolio out there, yes, it would probably be a company I would own a small percentage of in my portfolio, because the risk reward here, the reward is much bigger than the risk. I completely will acknowledge that there might be a risk of getting delisted from a stock exchange, but maybe that's worth the risk. I don't know about you, but the current valuation, the current numbers that Alibaba is showing us is pretty damn good. Like I said at the start of this video, if Alibaba wasn't a Chinese company, it would probably be worth $1 trillion, maybe even more at this stage, who knows. But that would be it for this video. Let me know down in the comments below what you think about Alibaba. Has this video changed your view on this company? Let me know down in the comments below. And if you like these videos, leave it a thumbs up. If you haven't subscribed to this channel, maybe hit that subscribe button. And as always guys, take care, stay safe, and see you all in the next video. Bye bye.